So I guess in the classic term of mining panel, down the line, you can introduce yourself one by one, and then we'll go for it.
My name is Bryan Feinberg. I'm the founder of Ethera Labs. I've been in the semiconductor business since 2003. At one time, I was an analyst. Now I'm just trying to figure out the roadmap at this point right now and kind of normalize the conversation around institutional investment in the space.
I'm Ronen Sartena, co-founder of BlockCrunch. We're a holdings company for BTC New York, BlockCrunch.com, and BlockchainEvent.com. We help companies raise capital, market their products, and consult for companies getting into the space.
Hi, I'm Usman Majeed. I run a crypto hedge fund, VC fund, and we invest in different aspects such as tokens as well as mining operations.
My name is Andrew Kiguel. I am the CEO and co-founder of Hut 8. Hut 8 is based in Canada. We are one of the largest Bitcoin miners in the world, public company. We have an exclusive partnership with one of the largest ASIC chip manufacturers in the world, being Bitfury.
All right. So yeah, to say the least, it's a very diverse panel, people coming from all kind of different backgrounds, and definitely a lot of people with traditional old money, as I see it, are getting involved more and more towards the mining aspect of it. People who are kind of disbelievers in the previous run-ups of price are now getting converted in this wave that I've seen. Just to give you a background in terms of how long I've been paying attention in this space, I've been involved in blockchain space for around 2013 timeframe. So I've seen quite a few before Ethereum got launched and before the whole blockchain thing became popular. And so there's a huge amount of space improvement that I've seen, or at least development that I've seen in terms of people who are getting involved. So down the line, what are the biggest pitfalls that you guys see from a compliance perspective when it comes to regulations around mining? Because I know in Canada specifically how the things have evolved, so we can start from that angle.
Being a licensed investment banker, I'm always watching the regulatory framework right now in terms of what is happening across certainly the investment landscape, but really kind of how transparency right now I think needs to be addressed across some of the commercial mining outfits that are out there and how they are delivering yield to their investors and clients. There's a tremendous amount of appetite right now, but nobody wants to get in trouble. And, the frameworks that are being established, certainly with SEC guidance, which has been very, very opaque, very much like I would say, the performance of the mining industry itself. We run an OTC desk here in New York, and I can tell you that the transparency and the opaqueness is something that is part of the dislocation of this marketplace right now.
We're working with a company called Tax Token, and they're helping people track cost basis to make sure that they're paying the right amount of taxes, not getting overcharged, and doing it fairly simply. So I would say having people easily find and being able to calculate their taxes and do their forms would be a pretty interesting growth area in terms of compliance in mining and in general with crypto.
I would say that I would agree with what you're saying, and I recently had a mining facility that we were invested in that was in Switzerland that they recently shut down due to a lot of overhead costs and unforeseen costs. So they were initially a cloud hosting company, and then they had a mining aspect as well, and the longevity of it didn't last as long. So we've been in talks with a lot of different mining companies to set up different operations. So we're usually looking for like a 2-year commitment. And in this space right now, since it's very early, it's hard to find a stable company in that aspect.
Yeah, I don't know if I have much more to add to that. I mean, obviously regulation is there to protect investors from, the standpoint of Hut 8. We're a public company. We file all of our documents online and comply with that. But we, haven't seen a lot. We're a very large Bitcoin miner. Have not really seen a lot of regulatory impact in what we do.
Yeah. So, from my understanding and reading, Canadian government have taken a stance in terms of leaving mining open towards the interpretation. From that perspective, SEC provided a little bit of clarity in the recent hearings, but again, it's a jurisdiction by jurisdiction basis where different regulators are going to get involved at some point in time, and whatever you get to, because I'll disagree with one of the panelists' answers, which is when somebody says, it's too early. Actually, in the mining game, or at least from the mining perspective of industry, it's fairly late. Like in terms of when you think from overall coin distribution perspective, and if we are talking only about Bitcoin, that's the biggest blockchain out there. There are other mining operations that one can run. I'm not quite sure if the runway is that long for the last coin to be mined, the full coin to be mined versus. So in terms of that, regulators are taking positions and there are legislations. So I'm kind of curious in terms of if you were to prepare your clients, if you were to prepare your customers for a tax regime which can change at a later stage, or a compliance regime which does not exist today, but is being left vague on purpose to say, okay, how do you protect against that? So that's really how have you individually on business-wise have thought about that implication? Because that would have some very long-term implication across the industry.
Yeah, I mean, look, from my perspective, when you talk about clients, when I see sort of some of the previous presentations here and buying miners, like I think that's a little bit of a dinosaur. From my perspective, it's going to become very difficult for individuals or people that are looking to mine on a small scale to compete with how the industry is moving to a much more of an industrial scale. So when we talk about the tax regimes of the individuals, can't comment on that, but there are better ways. So I think through some of the cloud computing or investing in something like Hut 8 or some of the other public miners out there like the Hive, which is backed by Genesis, I think that's the way a person should really look to get into the mining space, because we just signed a 42 megawatt deal with the city of Medicine Hat. Mm-hmm. Very cheap power, 10-year deal at a large scale. I don't know if anybody else in the room here can go and compete with that by ordering a machine and doing this out of their basement anymore. I just think it's gone from hobbyists to industrial scale, and sure, there's a certain amount of fun by buying the equipment and running it on your own, but I think that's kind of like the pterodactyl sitting on the top of the building about to become extinct.
Sure. I would like to get the perspective of people, when you're looking for customers, define customers. Are you considering accredited only customers, or you're considering, the average Joe who's out on the street and looking to get into mining? So that's specifically it. And there's a reason for that question, because the language that has been suggested is kind of very carefully been designed around those concerns.
Well, certainly from a capital raising perspective, we only deal with accredited on that side under full FINRA guidelines when doing a private placement. And, because of the murkiness across the ICO marketplace, a number of commercial, or I would say ICO miners that have come out are, the performance is really yet to be seen in terms of being able to kind of translate that down into the value of a coin. I think compliance is, it needs to be respected on so many different fronts. There's such a dislocation in the OTC market right now regarding coin validation, and kind of the choppiness is there. And we tried to, and we are still trying daily right now to be able to kind of close the gap on that dislocation by working through unified partners that are respecting compliance across both the AML and the KYC side, and having validation done on both sides. So what we do is we act as a transactional advisor to, basically bringing buyers and sellers into a venue that we know that we can get both validation as well as proof of funds. The liquidity side is really where I think investors are looking for right now, is kind of how to be able to invest in yield, create some predictability in their financial models and kind of run ROI on that side.
Yeah, I'd like to add to that. So on our end, we're actually talking to some governments. Eastern Europe obviously is a lot of miners and mining activity going on. Mm-hmm. A country like Uzbekistan, third cheapest power in the world. Yep. A lot of it's being subsidized by the government, so they want to make sure that it's coming back to the economy. And then blockchain as a whole, they're opening up their economy. They were kind of behind the times for a while, and now blockchain is actually a perfect use case because for us, we go to, we trust the government. There's really nothing to worry about. But when you're dealing with property in countries that are coming about, and they're used to, names on titles being shifted or, a lot of backdoor stuff, blockchain's a perfect use case. So we're seeing a lot as well. Like my co-founder Babir, he is very well known in Eastern Europe and Uzbekistan. We're actually seeing some support and a lot of interest on a governmental level to get into blockchain and to get into mining. Is that something that they would support?
Okay, that's actually a pretty good lead-in. So question, you talked about government. How many people, I would like to know from your industry perspective and the people that you've talked to or the meetings that you've had, how many people actually are in the opinion that at some point, regardless of which country, pick a country, some official in the technocrat department of information of technology, could be finance, could be, would suggest to the higher-ups, hey, by the way, we should pick up and nationalize the crypto mining operation of individuals, and then how likely is that in different jurisdictions from what you have seen or what you have talked to? And if you can provide some insights, that would be very helpful for, I guess.
Yeah, so by no means am I representing Uzbekistan or anyone like that, but we acknowledge it's extremely competitive, as you said, to get into the space. Bitfury is a perfect example, a great company, very well capitalized, experienced. Personally, what we're advising is to probably partner with them and just come up with an equitable structure. But I mean, the path to get there isn't too far off. Bitcoin is obviously becoming much more mainstream. Even like third largest economy in the world, Japan, you see so much on a national level support going into crypto. And I wouldn't be able to give you like an accurate analysis of timeline or stuff like that, but from my perspective, I don't think it's too far off to see stuff like that coming. And I would love to hear, maybe the people from Jamaica Central Bank could talk about that a little bit after the panel. But
well, it's interesting. I mean, from our perspective, and what you asked is a good question. You are trying to find the best cost of electricity because it makes up 75% of the your mining cost. But you're also trying to find a geopolitically stable country, which is one of the reasons we operate in Canada. Like, you could go to a place like Venezuela and get almost free electricity, but then you run into some of these political risks. Uh-huh. And I think the second piece, and this is something I'm hearing more and more about, the amount of energy consumption in the cryptocurrency world is huge. There's a lot of places in the world that use what I would call, dirtier energy than others. We rely primarily on natural gas, but there's still a lot of places using coal, which is bad for the environment. And I think as we move forward, one of the second key considerations that miners will start looking at is what is the type of energy that you're using. So we're getting approached a lot more now by people that are using wind, solar, and hydro. So again, it's the political risk of the country, but we're also looking at where does the energy come from, because we want to try and take leaps towards having more environmentally friendly sources of energy.
Perfect. I'll push back on my friend from Canada.
I think Bitcoin. I'm sorry.
Go.
I think Bitcoin and some of the larger currencies right now are in a little bit of competition with some of the central banks out there that have also kind of haven't played all their cards in terms of the way they want to treat this industry and the way that they want to be able to kind of use regulation to kind of decentralize some of the mechanisms that are in place that control certain economies out there. So I think it's the narrative is certainly going to start moving towards more regulatory compliance and initiative, especially as it comes down to energy, clean energy, and the need for that across the industry.
Sure. So the only comment about Canada is where Quebec had established earlier through reports. If you look through 2017, 2016, they were projecting they have excess electricity. All of a sudden, end of 2016, 2017, China says Bitcoin mining has to wind down slowly, methodically. The miners in China looking for places, like Quebec being one of them. And before they even started to move in, meaning the miners are opening up, I know you were one of the beneficiaries of that operations, but there were not that many lucky operators who were able to. And they already raised a hand saying, we don't have that much electricity, and then there was a whole bunch of news items that came out. And obviously what comes in news is not necessarily what happens behind closed doors, but nonetheless there is at least that ability of a pushback from regulators' perspective, from municipalities' perspective, that they would suggest that we don't have necessarily that much free electricity, especially when the questions are still around whether it's wasteful in energy, which I don't think that's a question that has yet been answered. Whether the Bitcoin mining industry is wasteful or not, or any other crypto is wasteful or not, that's an open-ended question. It's a very research-oriented question. So I'm not quite sure, where the things would land on that end. But it leads to a very good lead-in question for me, which is, how many of you see instead of government providing or utility company providing electricity for municipalities, microgrid structures, the one that you talked about, whether it's solar, wind power, where Bitcoin miners or crypto miners essentially become the provider of that electricity in the coming 10 years. Do you see that trend continuing, or do you see that trend coming up?
I think there's much more of a community right now that is trying to look for guidance and trying to be able to kind of create more self-regulation across the industry. And I think this is also going to be coupled with, driving innovation and kind of using yield in a way to be able to kind of go subsidize other things that can actually do great things for the world.
Yeah, so on one of the points you were saying is like if governments believe that it's wasted energy. So anything that increases the velocity and turnover of money that's not a result of increase of the money supply increases output and helps the economy grow. So like capitalism, is there a meaning to what we're buying? I mean, a lot less meaningful things have been marketed to consumers just to generate output. So I don't think a good economist would ever be like, and I'm honestly surprised, like Warren Buffett, Bill Gates, it's rat poison squared. It's not fraudulent, it's a store of value, it's a ledger. What the ledger is doing is up to companies. Maybe there's some bad players, but it doesn't mean that the entire thing is rat poison squared. So I don't think governments should be looking that way. And then as far as the future of like energy consumption, stuff like that, I'm curious to see like how much nuclear power will go behind stuff like this. I would be curious to hear what you guys have to say as well.
Yeah, it's interesting when you're mentioning Warren Buffett and people who generally don't understand, the difference between mining, blockchain, cryptocurrency. On the flight here, I was actually sitting next to, I believe, an environmental financialist, and we were talking about crypto and mining, and she was just grilling me super hard. She's like, it's totally bad for the environment. And I was telling her, look, we're using hydroelectric. There's a lot of renewable energy that we're using, but I mean, in the end game, I guess her point was you're still making a lot of money off the planet, and there could be some detrimental effects. For example, like you mentioned, there's still places that are using coal, which is bad for the environment. But yeah.
I mean, I think generally most companies operate in a way to be economically rational. So, have in the past people been not conscientious of where they're getting their power from as long as it's cheap? Yes. I think as the area gathers more momentum, becomes more institutional, there will be more focus on the environmental issues. So we've actually been approached by nuclear. We've been approached by a site in Canada that's nuclear, 100 megawatts. So it's interesting. So I don't know where things will end up, but people are looking at all types of different types of power.
Okay. So one question over here they wanted me to ask around proof of work versus proof of stake. any of the panelists have an opinion about whether a proof of stake would be a transition that Ethereum, because that's the second biggest blockchain, which is public blockchain, which is kind of trusted, which has at least mining ability today, but they are going to move away from that and would cut out the whole mining. And Vlad Zemfir, who's the lead researcher at Ethereum camp, and also Vitalik as well, because he's talked quite publicly. What do you guys think about, would that be a successful one, and B, what's your general opinion?
Well, I think there's a lot of intelligence out there if you just look at the Ethereum registry and see all the companies that are kind of coming up from behind with great projects, and yet, these applications, if not years, maybe generations from being realized in the commercial sector. So the activity there is to try to be able to kind of filter those coins and try to get to them before other people, if there's going to be some momentum in terms of accelerating the application into a real proof of work.
Okay.
Yeah, I mean, I agree with that, and there's always going to be new coins that, it's whatever's lucrative at the moment, people will start to mine it. However, when I talk to people in Silicon Valley developing dApps or other ERC20 tokens, a lot of them are hesitant to allow mining, so they're more favorable to the proof of stake. But I still think, for example, Bitcoin, you'll be mining that for a long time, and there's a lot of different other coins. But then again, you have coins like Monero that recently, they released their ASIC resistant fork. However, there are ways to get around that. So if you understand the miners at a hardware and software level, my background is computer science, you can actually find ways to get around that ASIC resistant. And with the new miners, they'll be able to do that as well.
Do you have anything to add?
Yeah, I agree with. Bitcoin will never move away from proof of work. Although I think in the future other altcoins will look at other forms.
Okay, perfect. So when we talk about, let's say, proof of stake, proof of work, and then proof of work, the biggest problem today, and has been since the beginning, since the advent of ASICs, I would say, is the equipment scarcity. Like in terms of how easily equipment is available to a new upcoming miner or somebody who's trying to decentralize. The whole concept of a decentralized ecosystem, how easy it was, let's say for your entrance, how easy it is to for somebody to get into Bitcoin mining to begin with.
I think as an individual today, it's extremely hard to get into it. Again, I think it's moved away from hobbyist to industrial scale. When we originally came up with Hut 8 and wanted to look at this from an industrial scale standpoint, we said, why don't we contact one of the largest players in the world? And that's why we created the partnership with Bitfury. At that time, the lag time for ordering equipment, was something like 6 to 12 months. When's it going to be delivered? Are you going to get it? We created the partnership with Bitfury because we wanted to eliminate that exact issue. So they own 44% of Hut 8. So I know I'm getting my equipment on time. I know it's going to be operating properly, and eliminate that risk. I think it would be extremely difficult for anybody else to do that. You're just, you're ordering equipment online. When's it going to get here? Then you got to figure out how to set it up, how to secure it. It's moving away from that into this industrial scale. So I think it's very hard for people to enter that space now.
I would agree with that, and I've had quite a history coming from mining solo versus at the larger level. I started mining Bitcoin in 2010 just for fun on a laptop, and then at that point you could mine several hundred Bitcoin just with a simple laptop CPU, and I actually don't know where all those Bitcoins are, but I must have sold the laptop or whatever. So, but anyways. And then 2013, 2014, while I was in undergrad, I was mining in the dorms, so electricity wasn't a factor. And this is right before they released the first ASIC, and we were doing GPU mining rigs, and we would just always trip the circuit breaker. So that wasn't scalable as well. But right now, yes, I would agree with you that to get into the game, if you want to make a lot of money, it's heavy upfront costs.
Yeah, I mean, just to put in perspective, from what I hear in the marketplace is the break even for most miners could be anywhere from, call it $6,000 to $8,000.
Yeah.
Right now, Bitcoin is trading about $8,100 last time I checked. We're mining for about $2,000 a coin. So in that perspective, because we have such access to the electricity and everything else, I think it would be very hard for anybody else to come in and compete with what we're doing.
I think you have to also believe in the growth of the underlying asset there as well. So, this will kind of change the yield mechanisms. And not to make a cheesy pitch, but I do have 85 S9s in boxes for sale at somewhat of a distressed price right now, which is I'm seeing more and more of today as people are kind of afraid to make any capital investments where, as the last wave up in Q4 of last year, things were very, very tight, and the gray market was kind of pushing product up into an area that maybe some people regret buying at, during a slight shortage that was there.
Yeah, I think there's a lot of people that regret putting in those orders because they're when we talked about the network hash rate earlier, I think a lot of people are out there losing money right now. And I think they're mining and selling into the market as quickly as possible because they can't cover their electricity costs.
Well, there's a number of commercial mining clients that we have right now that are actually looking to buy Bitcoin to be able to supply their investors because they're just not producing the yields that investors expected at the last year when they started to deploy some pretty serious capital into infrastructure there.
Yeah, I agree. The underlying asset definitely has a great value. It's 8,100 right now for Bitcoin, and with the difficulty always increasing, it's hard to make a good ROI. Whereas, back in December when they were, Bitmain was shipping the January batches, people weren't expecting, well, the average person wasn't expecting Bitcoin to go from 20K all the way down to 8K, which, reduced a lot of their mining profits. And that's why you'll see that people are trying to sell their S9s. And
I think you're seeing, I would say an acceleration right now towards, moving to 7 nanometer environments, because as the semiconductor industry continues to go lower and lower, the instability of kind of the technology now kind of drives both not only the difficulty but the yield that can be extracted there. So, this next generation of investment that's going in, there's going to be a gray market of oversupply on, 9 nanometer technology that is going to have to find a home somewhere else to do something else.
Okay, perfect. So in terms of when we talk about the mining hardware, what do you think is going to be the timeline? Previously, Bitcoin or Satoshi's law has exceeded Moore's law in terms of hardware acceleration. So in terms of, but now, right now, we are locked in Moore's law pretty hard on. There are some efficiencies that, or optimizations that engineers have been looking at, or at least have been experimenting with from a pipeline structure perspective, and there's a bunch of theories around it. There's not yet been a public announcement by any of the major ones. And Samsung and IBM, these are like two major which have at least came out with some public statements around it. And GMC Lab in Japan, I think, was the where do you see the Bitmains of the world and the Bitfuries of the world competing with the Samsung of the world? How do you see that market evolve, and where do you see things evolve from that perspective? I know Alex Petrov would be here from Bitfury as well. So,
I don't see them as necessarily competing. I think Samsung and Taiwan Semiconductor will continue to service those places. I mean, it's expensive to create that technology to get there, and I think the expertise that the Bitfuries and the Bitmains have would be very hard for Taiwan Semiconductor or Samsung to replicate. However, I think that they will do the fabrication.
Having watched 35 nanometer excitement 13 or 14 years ago as we were moving down the scale, I think it's back to process technology right now in the way silicone is kind of I would say it morphs. So, I believe some of the larger players like Samsung and so forth like that are working on new process technology to kind of drive a different generation of, silicone and performance out of the chipsets.
Okay. In terms of, other than Bitcoin, what would be the other top three down the road cryptos that you would say you would look at from a 5 years perspective? Because, things are profitable for the next 2 weeks, that's irrelevant. But 5 years project that you have professionally evaluated and said, okay, yeah, I'm willing to allocate capital towards coin X. I want to see down the right, because I do have one, but I want to see.
Well, I think the obvious is Ethereum right now, just simply due to the volume of companies that are coming out with new technologies that, are going to kind of, not only help, drive application use on Ethereum products, but really the underlying, respect for Ethereum as another main currency.
Okay, so let me make the question a little difficult then. So we can leave Ethereum, we can leave Bitcoin Cash, because these are very well-established use cases where people have identified, and we can leave even Litecoin as well. So and Monero. So leaving these 3 or 4 apart, there's a whole list, because essentially when you're evaluating as a professional, when you're evaluating the industry, there are projects, and there is too much noise right now. This is an argument that I had with Andreas in 2013. There's too much noise right now out there in the market, and yet, there are legitimate projects that exist within that noise. That's a true signal, and people don't necessarily know how to pay attention towards that. So, given that you are professionally doing this, so I've made the question sufficiently difficult. So, pick for me 1 or 2 apart from these.
Well, I think you missed Bitcoin Cash, so I got you there.
Bitcoin Cash.
Oh, you did? Okay, gotcha.
Because Bitcoin Cash is a very well-established 2 use cases. One is for gold, one is for...
So one that I do know a lot of people are mining is Sia Coin.
Okay.
Yeah.
I want everyone.
From my perspective, I don't think we would look to mine anything that uses GPU right now.
Okay.
Because as was being mentioned before, I think there's a lot of development for moving on the altcoin mining from GPU to ASIC. So while the ASIC chips take these small leaps every year, it's sort of like the difference, the next generation of your Apple phone to the previous one has some slight tweaks. The leap from GPU to ASIC mining on these altcoins is going to be dramatic, and I think it could be impactful to any of that GPU equipment. But outside of Bitcoin, the only other thing I would look at may be CryptoKitties. Other than that,
as far as like protocols and different blockchains that are interesting to me, I think EOS is doing some pretty cool stuff. Okay. We're working with a lot of really interesting consumer-facing dApps. We're fortunate to have a lot of celebrity connections. So we're finding dApps and projects that can legitimately have a lot of traffic. Good example of that, Fan Control Football League. People can actually call real life plays on like a Madden type of football league using blockchain, really legitimate use case for blockchain, cryptocurrency, etc. But if we were to build it on something like Ethereum, and let's say 100,000, 200,000 people are watching a game at a time, which they actually have real traction to show that, it's going to be backed up. So I think EOS and as far as like dApps goes, if we're making a flight to real consumer-facing dApps that actually have real traffic, not just traders, we're going to really need to address that issue in the near future.
Okay. So I do want to leave some time out for the questions for the audience as well. But in terms of long-term perspective, how many people are of the opinion that the Bitcoin industry and the mining is the exit game? So the miners who are doing it professionally today, who are last standing, are basically waiting on an exit scenario to say, okay, I would leave the last man standing with the bag. So how many people are of that opinion in terms of industry perspective? That miners are the ones who actually control the last standing card, which, if they stop mining, then basically the whole industry goes away from that perspective.
Well, I mean, I wouldn't say necessarily it would.
And this is, by the way, a legitimate opinion being discussed at banks as well.
Yeah.
So.
I mean, there's a lot of different ways you can verify transactions on the blockchain. It depends on which token you're talking about. Bitcoin, if you're talking about that, or Ethereum, when they're going to proof of stake and sharding, and then you have master nodes, which are also verifying the transactions. So it kind of depends on that, I think.
Anyone else has an opinion about it?
It's an interesting question. It's kind of counter to the idea of decentralized ledgers. So, I wouldn't be able to give a good answer to that, but I never actually thought of that before.
Okay. If a central government or a bank, or a large bank, or a Warren Buffett like entity was to destroy a public blockchain, one of the ways could be to wait when the market for large investors or people who have invested large amount of capital over a long time horizon to make it so unprofitable in the present market that the market value is that the Bitcoin or any crypto is trading, by the way, and all of these asset classes are correlation, to let it go for such a long time, over an extended period of time, the value to be so unprofitable for large miners that they essentially would have to file for bankruptcies and would start to go away. And at that time, in parallel, this is not a conspiracy theory, this is some people have did game theory analysis around it as well. And at that time, banks come up with their private blockchains in parallel, which is doing the same value transfer, does not necessarily need a whole bunch of mining, can operate at a value that Ripple is operating at, which is sub $1. So, and they can bypass the whole mining aspect of it. R3SEV has done Jasper project, part of Bank of Canada and other payment processes as well. There are learnings from each one of those projects, but imagine there's two things happening. One, the sustained low value of Bitcoin or all the cryptos over a long period of time, where basically miners are leaving in droves because it's not rational. It's not rational to be mining it.
I don't see how that could ever happen. If you go back to the genesis of Bitcoin, the white paper was written in 2008 during the October, during the one of the largest financial crisis since the Great Depression, and it was created as a fuck you to government and banks. So the idea of the banks somehow reclaiming this doesn't make any sense to me. Sure, you might find ways to destroy what's out there, but I think ultimately something else will arise, because there's definitely when people look at governments and central banks, there's a lack of trust or the legitimizing that, and so I think something else will always arise that is decentralized and validated by the consensus of the group and the community, as opposed to a central bank or a government.
Yeah, I think it's an interesting question. Personally, I think a ledger is like an Excel sheet. It's not a beautiful gold coin with a B inside of it. You're buying ownership of an Excel sheet at the end of the day, and the value of it is based on supply and demand. Miners at the end of the day are likely the largest holders of the ownership of the ledger, and they're not going to sell for less than what it costed them or will cost them to obtain. So I do think there is a floor to how low the price of different cryptocurrencies can go. And then at the end of the day as well, like the community for a lot of different blockchain ledgers aren't going away. I mean, they're hodlers and they're proud of it. They've been there since the beginning, and they have a lot of money now. I have a lot of friends that are very, very rich because of this movement, and they're going to be lifers. So I don't really see that happening. On the flip side, the potential for capital and institutional capital to come into the industry is quite tremendous. And over the long term, I'm not well equipped enough to say over the long term what's going to happen, but in the near to midterm, I'm very bullish on the industry at large and wouldn't foresee something like that happening either.
I think there's still a great concentration of control in this marketplace by, the 90 or 100 so people that can, or entities that control most of the coin that's out there right there. And, pricing may be artificially suppressed right now. Certainly there's a lot of activity, a lot of institutional appetite for coin that can be validated. But there's also a lot of fraud that's going on right now also. So we don't really get a clear picture until we're at the finish line on a trade, whether or not we're going to get it over the finish line and whether the coin actually exists. So I think as those holders start to distribute more of their coin out there, the wealth and the control and the power of that will be more decentralized.
So at this point, I'll open up for the floor for the audience questions, if there are any questions. Excellent question. So people that you're bringing in as clients, people who are the end customers for a big operator, mining operator, somebody you're raising finance for, how do you make sure that those people have been KYC'd on your behalf, meaning you have done that due diligence?
So certainly this is a very, very important consideration if the normalization across the regulatory environment is going to happen. Most of the escrows that are out there, or anybody that is involved in any kind of trade transaction, is doing AML KYC based under their regulatory requirements as an escrow. The coin side is a little bit different, and some great companies like Elliptic has come along to kind of provide a solution, and then there are other OTC environments like Volantis that are providing both the financial escrow side of things as well as the coin validation. So, unifying that in a way that validation can take place and, trust can be established, will create smoother transactions.
Yeah, and to piggyback a little bit on that, the banks really do play a big role in the AML KYC. For example, we're talking to clients that want to do large trades or investments in the billion-dollar range, multi-billion-dollar range, and just telling my bank manager, look, I need to wire, $500 million to the account is, a huge red flag, especially because in the general public, crypto and blockchain kind of has a negative stigma as far as the financial markets are concerned. So yeah, I agree with what he's saying.
So what are the practices? So I guess the question was around what are the practices that could be established?
I think to answer your question, I view it as two very separate issues. So we're talking about the decentralization versus the regulatory stuff that you see from the government. So the regulation is there, I think, to protect people from fraud and bad actors that are there. However, the actual operation, so, I look at it as, let's put some rules in place, I think what the government would like to do, to prevent people from being scammed. But then the actual coin or the company, whatever it is behind that token or miner or whatever it is, that is the piece that is validated by the community. So I think it's a function of the government would like to put in some rules as to how people can operate to avoid bad actors and fraud.
I also think fractional reserve banking, modern money mechanics, the modern money supply and the entire ecosystem of it, not that everything's going to change overnight, or I'm not saying anything that drastic, but to keep it on a decentralized ledger, it's a much more efficient process than the current method of the Federal Reserve banking system. So Goldman Sachs just came out and announced, I think they're doing a US-backed Tether token. That makes a lot of sense, and for a central bank, and regulatory, with relation to regulations, a ledger that's decentralized and more efficient doesn't necessarily mean it's safer for investors. There's still a need for government to ensure that people aren't being scammed, there's not fraudulent activity going on, but at the same time, you could still utilize a decentralized ledger to make the entire process more efficient.
Okay, so yeah, we have one more question.
Obviously, mining is a super capital-intensive business. Do you guys know of any financial instruments that would allow investors, maybe some type of venture debt financing, where investors could basically participate in the upside if Bitcoin goes up, but also make back their
somebody who.
I've got a great idea. You can buy Hut 8. So Hut 8 was formed about 7 months ago, and it was myself. I was an investment banker for 21 years, and I was part of the blockchain team and had been raising probably close to $1 billion of equity for different companies. And we said, wouldn't it be great if there was a public vehicle that was out there that would mine Bitcoin so that people could avoid all of these steps, the capital intensity of having to go buy the machines, figure out how to secure it, so we created Hut 8 for that very reason, took it public so people could buy in and out and avoid all the complexities of having to buy or mine the underlying cryptocurrency. So.
So we've been working on a financial instrument right now to invest in yield with complete transparency across the mines that we are looking to invest in. So to us, it's all about transparency in terms of the performance and how it goes down to the investor. I don't know if you ever went to an institutional investor and asked them, start talking about tokens. Their eyes start to glaze over, and people start to nod out. So. I think conventional financial instruments that investors can understand and invest in, this industry still has tremendous opportunities in front of it to invest in not only the underlying growth, but the yield that some of, these coins can produce.
I think this is all the time we have. Thank you very much.
Thank you.